Hi everyone, today let's talk about Walmart earnings. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So Walmart announced earnings this morning and they did very well. Everything was super bullish. Primarily the e-commerce section was up 22%. They also saw an influx of high income shoppers coming over to the Walmart brand. And on the back of this, the stock was up 6% pre-market. You can see net sales growth 3 to 4% for the full year guide. $2.23 up to potentially $2.37 for full year earnings. You can see it closed up 7% on the day. You can see for the quarter, 60 cents versus 52 expected on earnings, and about a $2 billion beat on revenue. So Walmart doing very well, and everything continues to be very strong here for Walmart. They also saw revenues grow 6% from a year ago, so good on their comps as well. And you can see same-store sales grew by 3.8%. The year-over-year change was a little bit weaker than we've been seeing, but these are some pretty tough comps and they are beating them still. Moving over to fear and greed, you can see we got up to a 60. We were at a 59 yesterday, and I do believe that's going to come down. You can see that is a bit of a step down here. I think it's going to continue lower. We'll take a look at it on the charts, but you can see momentum, greed, strength in regular fear, and then breadth in greed. So we're definitely seeing some mixed signals still, and I think markets are showing a little bit of weakness. Extreme greed here still on the put-call ratio, and then we are looking at volatility basically at these same lows here, still sitting in neutral. And then safe haven demand in greed. We'll take a look at the bonds, and then junk bond demand in neutral. So we're starting to see corporates start to lead to the upside a little bit. Moving over to seasonality, we did skip this last episode, but this episode I do want to highlight it. We are here at the 16th. This is typically the high point for the middle of the month, and it does show a potential weakness here leading into the second and third weeks of the month. I do think we're going to see this weakness period that we have in May historically. We just haven't seen it quite yet. Moving over to the economic calendar, you can see here initial jobless claims did step down just a little bit. Still higher than expectations, but it wasn't as high as the previous read, which you can also see was actually revised higher, so that's not great. Definitely showing some weakness in the jobs market. I think most people expected it to be higher, but I would have expected it to be even higher than the previous read if we were going to see a pretty consistent rise on unemployment, which we're not seeing quite yet. And then you can see Philly Fed manufacturing coming in a little bit weaker as well at 4.5 versus 7.7. Previous read was 15.5, so that was not great either. And then looking at Fed balance sheet, about another $50 billion rolling off the balance sheet this week, which is very strong. So still seeing quantitative tightening from the Fed. And then looking at the Friday session, we have CPI for the Eurozone. Got a couple of Fed members speaking, and that'll wrap it up for the economic calendar. Moving over to Max Pain, you can see it's still here around that 510, 512 area. Stock price up at 530. Total options down to 3.3 million. Put call ratio down at 3.6. I still think we're going to see a move towards that Max Pain, and the charts at the end of the day did look a little bit bearish, so definitely something to pay attention to. Top of the puts down around 525, 526. And if we get a finish like that, it's still a very bullish finish, but that means we could still see about a 0.5% down move tomorrow. So something to keep in mind as we go into our Friday trading. Moving over to the charts, starting off with the S&Ps here, you can see we broke that trend line yesterday, and then here today we did go a little bit higher, and then we broke down at the end of the session, and we are falling now. So 55 EMA all the way down there, 525.25, which makes sense for markets to move in that direction based on Max Pain. You can see support level 524.23. Momentum bearish, RSI bearish, everything looks weak on the shorter time frames, and this is still very extended on the daily chart. You can see a wick to some new highs, but then we closed bearish on the day. You can also see momentum rolling down. We did touch overbought conditions on the RSI on the daily chart just for a moment before selling off, so seems like we might see a little bit of a topping pattern, might not even pull back to the upside, could go straight down into tomorrow's session. Moving over to the Tasty charts, you can see we are still extended way above that upper ATR, currently sitting at 527.28, so we would pull back about another $1 or so. We'll see how that plays. Momentum is still strong here, but looking at the 4-hour chart, you can see we're sitting right on top of that 8 EMA. Looks like we're probably going to pull back to that 525 area based on the 4-hour chart. You can also see momentum on the 4-hour looking quite weak. And then looking at that hourly chart, you can see we actually stepped into bearish conditions on the hourly time frame, so shorter time frames definitely showing weakness. And you can see that ATR stop to the upside is now sitting at 532.50. Moving over to the NASDAQ, very similar thesis here to the SPY. These have been moving pretty much in tandem pretty recently, and you can see that here again, slightly higher high, pulled back into the mid session and into the end of the session. Momentum bearish, volume ramping up on that sell. Seems like we're probably headed lower. 55 EMA there at 448. Then you have some trend support sitting down there as well. And then 446.66 is the level. Probably going to add some levels on this move here. Definitely one at the all-time high there around that 450.36 area. And then you can see wick high, wick rejection. Momentum didn't break down. We didn't hit overbought conditions, but this does look a little bit weaker going into tomorrow's session. Moving over to the Tasty charts, you can see that same upper ATR band, 451.38. So we did close above it, but you would expect it to pull back a little bit more. 8 EMA sitting all the way down at 445. Momentum still bullish. ATR stops all the way down at 436, so has some room to fall, and I think that it will. And then you can see that same thesis here on the 4-hour, testing that 8 EMA. ATR stops there, 448.64, which is that same zone that we talked about as a zone of support. I think we're going to head in that direction and at least test it. And then similarly to the SPY here, you can see on the hourly chart, we did take out that support line that was there at 452.39. So we are in bearish conditions on the shorter time frame. Almost touched that lowest ATR on the hourly chart already, which is at 451.25. You also have the 34 EMA sitting right there as support. Realistically, I think this is going to break and then potentially push to the next one. 449.84 would be that support level. Moving over to the Russell and the Dow, you can see the Russell sold off quite a lot actually, 0.72 on the day, and it broke my level here, 208.22. So my next zone of support would be 206.50. If it holds that, we're going to be in good shape. There's also the 9 EMA there, 205.82. Also the highly traded zone right in that same area. And zooming in here to the hourly chart, you can see we broke that structure. 55 EMA, 207.39, so probably a little bit more downside potential there. And then looking at the Dow, big wick rejection after getting to all-time highs. Did touch that 4,000 level, got all the way up to 401 was the high of the day. And now you can see it's pulling back, hit overbought conditions. Seems like both of these are going to pull back a little bit further tomorrow. Moving over to the equal weighted S&Ps, I wanted to highlight this one here today. So it was bearish on the day. It didn't break support or anything, but the big concern here for me is that the equal weighted S&Ps did not establish a higher high or even a double top on this most recent run. So we have the S&Ps, the NASDAQ both breaking out. The Dow broke out a little bit, but you can see the equal weighted S&Ps are establishing a lower high if we break down from here. You can also see on the momentum, we got a step down, RSI stepping down, definitely concerning. And if this pulls back from here, that could spell some lower lows to come, especially if it pulls back and breaks this low here. Then you could be looking at a touch of that 200 all the way down at 153.64. Moving over to stocks that moved here today, we have Walmart and Chubb. Walmart obviously popping on their earnings, but Chubb, they popped on the idea that Warren Buffett established a position with Berkshire Hathaway. They've been establishing a position for a while, a couple of quarters, and then it got announced here today that they did establish that position. And on the back of that, Chubb went higher, people trying to participate in that run. And then moving over here to Walmart, you can see this is all-time highs for Walmart, so there's really no structure. I tried to add some lines here. So you had a consolidation going into the earnings, broke through that level. You had this previous run here from mid-December all the way up until mid-March. So that was a very strong run from 50 all the way up to the 61 zone. And now we are almost to that trend line. If you could argue that's going to be your resistance here around $65. Massive momentum, super overbought, and everything looks bullish here based on that earnings. Moving over to the Walmart Tasty charts on the monthly chart, I just wanted to highlight the fact that these ATRs are acting as resistance here at 64.32. So we did touch that level and then we're starting to pull back a little bit. This is the longest time frame that Tasty offers, so the monthly chart, and typically this is a zone that holds. You can see we did get above it here in November of 2017, and then we pulled back right into the middle of the range. Similarly tested it here and then pulled back, tested it here, pulled back. And then it remains to be seen if we're going to actually push a little bit higher and then pull back, kind of like we did here, but typically there is a pullback once you hit this zone. Moving over to a Mag 7 chart that I'm working on. This is a more price normalized Mag 7 chart. I felt like NVIDIA was really just pushing around the chart that I was looking at before, and this looks a little bit more interesting to me. You can see it hasn't been nearly as bullish as previously mentioned on the other charts. You can see this move here is still about 12.5% to the upside, so that's been strong. That's from mid-April to current levels. But this is something that I'm still working on. We'll see if it becomes more useful. Right now you can see we're at all-time highs on this chart. But we did doji, it was down 0.24, and it does seem like this is probably going to sell off a little bit more. potentially down to trend support or the 21 EMA if I had to guess. But this chart is a lot more choppy than the other one. Not sure if I'm going to keep it this way, but just something I'm looking at. Moving over to Apple and Tesla. So Apple hitting that trend line once again. So this is an important trend line here, and we closed back below 189.96. So that's a little bit concerning. If this sells off there, that could be bearish. We are seeing momentum sell off, RSI starting to sell off a little bit. I think this is a zone that's actually going to be respected on this up move. We'll see what happens after that. How far will it pull back? Could pull back all the way to these consolidation lows around 182.37. That would be interesting. But look at Tesla really hanging in here. So it looked terrible yesterday on that down day, 2% down. Took out the trend line, but we got a bit of a bounce off the 55 EMA. We talked about this zone being super important. 167.34 being that support for me. This is a consolidation zone. We've talked about it before. If this can get back above the trend line and push, that could be quite good. 177.70 is a level in there that matters to me as well. You can see we've had a couple of closes right there. You can see we closed on that level on 7 May, and we also closed on that level on 14 May. It's been an important level. Need to see it get above that, hold, and then we could look for a push. So right now, still consolidation, but it's hanging in there better than I thought that it would today. Moving over to Meta and NVIDIA, you can see Meta was down 1.73%, pretty bearish, especially considering how bullish it looked on the Wednesday session. Looked very powerful into that mid-session, and then it was down here today, so not great. We're still at that 9 EMA, so trend still short-term bullish, but you can see momentum is fading. If this breaks from this structure here, that's going to be quite bearish. And then looking at NVIDIA, got very close to that upper resistance. You can see it here. We thought that it might get to that resistance, and now it's selling off. Momentum still decent, RSI still decent. You can see a much lower RSI read here than these previous consolidation highs, so relative strength definitely weaker, and that's a huge divergence as well. So if this sells off from here, again, that could be quite concerning. Moving over to staples and discretionaries, it seems like the risk off play is back on. 1.42% here for staples, absolutely massive gap higher and rally. 79.90 is our next resistance. Let's go ahead and extend out some of these trend lines. I think we might be getting into that zone. Not quite there yet, but that is your short-term price target. That's up around $79. And then look at discretionaries here, absolutely selling off. Still could not get above 180.10, so there's been no trade for me. Definitely consolidation. Seems like we're probably going to pull back again. You can see we're selling after hours. I still like Tesla, which typically pushes this market around, but this choppiness here on discretionaries does not look good at all. Moving over to oil and gas and industrials, you can see oil and gas still holding inside of this structure. I still think this is going to break to the upside. If this trend line breaks down, we're probably headed to that 145.92 zone, but I still like it. I think it looks okay. Waiting for that trend break, and then we'll see if it goes. If it does, 161.59 would be your first price target. And then looking at industrials, this looks pretty awful here now. So we had the breakdown, consolidation, retest of trend. Now we're breaking down from that zone. Momentum is fading, RSI is fading. And that is definitely concerning. Doesn't mean this can't pull back to that 55 and 21 EMAs right in here. So it's certainly possible that that happens and we find some support in that zone. But if this dynamic support does not hold somewhere between 122 and 123.30, then this could be headed much lower. You can even see here on the volume profile, there is not a ton of volume through here until we get to this next consolidation. It's been a massive run, and it does seem like industrials might be pulling back here soon. Moving over to breadth, 20 and 50-day breadth. 20-day not showing anything. It's still consolidating in this zone, just like we thought it was going to, but you can see momentum starting to sell off in this consolidation. That's not great. And then looking at 50-day, we did see a little bit of bearishness coming off of that 144 EMA. Didn't break the level 62.25. But the bigger concern here is you can see that momentum. We got a step towards bearish. That is not what you want to see. If this structurally breaks, we could see a pullback to that 21 EMA, which could be a little bit of a pullback. I do think that that's going to happen at some point. Remember, May is historically weak, so would not be shocking if we saw a little bit of a pullback, and that first step towards bearish is concerning. Moving over to the dollar, you can see we did continue this downtrend, but then we hit this trend line here and we bounced extremely powerfully, almost to the penny, really strong back into this range here now on the hourly chart. On the daily, it doesn't show that we're in it quite yet, but that is interesting. Momentum still bearish, RSI still bearish, shorter time frame showing a little bit of bullishness. So we'll see how this plays. Right now we are finding support at trend. We're back above 104.41 after testing some lower lows. So to me, that is a little bit bullish going into tomorrow's session. And if that happens, that's going to be bearish for equities. Moving over to yields, these continue to look a little bit bearish, but you can see that they did catch a bounce here today, up 1.46% and 0.7 on the 2 and the 10-year respectively. So we did get to a lower low on Wednesday, and then we rallied up here a little bit today. We'll see if we can get back above 4.8. I really don't think it's going to happen. I think yields are probably going to go lower. And then looking at the 10-year, you can see back above 4.35, holding that 200 SMA. Momentum on both of these is still bearish, but you can see it's starting to swing back to the bullish side. See how it looks right now. Still looks bearish for me. Shorter time frames are probably a little bit bullish. Moving over to bonds, you can see we got an inside candle on J&K, so we didn't get to that 94.82 level. Momentum starting to fade a little bit. We'll see if this sells off here a little bit. Still a bullish trend based on the EMAs and SMAs, but you can see here on TLT, this is concerning. We hit that 200, we sold off a little bit. Momentum still bullish, RSI still okay, but this could be a short-term pullback based on that resistance here. You would expect the 9 EMA to hold. That would be 90.80, touch that level and then look for a rally, or it could just be a short hesitation here and then we could push higher, which does fit more with my yield thesis from the previous charts. Moving over to volatility, you can see move index selling off, VIX still at the same level, touch that level again, same as yesterday. If it's going to bounce, probably from here. Question is, how long does it take to catch that bounce? Sometimes it takes a couple of days, sometimes it takes a week. So eventually it'll probably bounce, but it hasn't done anything with it yet. So just continuing to watch volatility at these levels. Moving over to my accounts, I made a little bit of money, which is good considering that markets were down a little bit. So we'll see how it plays. Right now, I took off my IWM position, made just a few dollars on that. So the covered call did protect me from all of that downside move, which is nice. And then still managed to make a few dollars on the day. I'll watch that one for tomorrow's session, see if it's worth jumping back in. Right now, my guess is that it won't be. But otherwise, looking at the Qs, you can see I do have a 451 put. So I rolled this down for tomorrow's session. And even with that, I still was in a slightly losing position. So I got 67 cents credit on that. And then I actually rolled in and down on that covered call that I had. So 452 on that for $1.32 credit. And that's in a small profit. I think we're probably going to go a little bit lower. That fits with the max pain thesis. And then I still have this longer dated covered call down here at 445 for $8 credit. So still collecting plenty of money on that position for that covered call, which is helping me stay in a profitable position overall as well. Let me know down in the comment section what you think of Walmart earnings. Did they absolutely blow it out for you? And are you looking to get into this company now that they are already at all-time highs? Is that forward guide strong enough to keep it going higher? Or is this just a blip and we're going to pull back tomorrow? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.